Welcome back to Fast Market here on the Schwab Network. It's time for our Cash Tag segment. For that, let's bring in Andy Swan. He's a co-founder at LikeFolio. Welcome back to the show, Andy.
Thank you.
All right, Andy, so we're talking Domino's Pizza here. The stock's had a good run over the last couple of months. It was a pretty choppy 2023, but this company continues to execute same-store sales. They've brought AI, they've brought in automation, their app. It seems like they're ahead of the game as far as the tech side of it. What kind of data do you have that kind of supports the move we've seen over the last couple of months?
Yeah, it's really good data, really good move. LikeFolio data definitely supports what's going on. And, we think it could continue into the future. One of the things with Domino's that we've really looked at is this balance between, the pizza delivery business and the overall food delivery business. And one thing that we're starting to see, you saw it with DoorDash, really getting cut after earnings, and Uber pulling back to basically even after earnings, is that, these businesses are getting expensive to run for multiple, if you're servicing multiple restaurants and just paying drivers. Domino's and Wingstop, if you look at Wingstop's earnings, they came out really nice. They've had a really nice run. And so what we're seeing is that there's a little bit of a shift of the pendulum back towards, that vertical delivery integration, towards being the food maker, the company setting the price on the food, all of that. And if you look at LikeFolio data, Domino's Pizza is dominating in terms of the year-over-year happiness levels. Consumer happiness higher than Wingstop, higher than Papa John's, way higher than DoorDash and Uber Eats. And the year-over-year change in web visits, which is a key component in understanding how much business they're doing, we've got that up 17% year-over-year. Again, better than Wingstop, better than Uber Eats, better than DoorDash. And so overall, I think this is a company where the overall consumer trend is shifting back their direction. And as we've seen in the past, Domino's is a company that can execute very, very well, especially when they've got a little bit of a tailwind at their back. And I think that's exactly where they're at right now.
Andy, when we think about pizza, it's a very regional product, yes. Right? Half of the pizza makers in this country are small regional mom and pop shops, really half. That lets a company like Domino's dominate in terms of their size, in terms of their technology. But technology's getting a little easier and easier, yes. Via websites and via delivery for other companies to compete. Now, is that good for Domino's? Because they also have gone into delivery of it, during some of these other companies, or does that hurt Domino's?
Yeah, I think that factor is a two-way street. I do think Domino's has been a leader in technology. That's part of what their enormous turnaround was, that I think is probably one of the greatest business turnaround stories of all time that every MBA student should be studying. A lot of that was led by Domino's being very honest about their product and investing in the technology that their customers wanted. So I think they have a history of very solid execution in that space. And I think that gives them an advantage. If we were talking about, Pizza Hut or Papa John's catching up or trying to catch up on technology, it would be a different story. We've seen it proven track record from Domino's, which I think is a big difference maker. And when you look at the LikeFolio consumer happiness numbers, they just don't lie. They're far and above the best in the pizza business and in the overall food delivery business.
Yeah, that's what I was kind of expand on, that happiness levels. Wingstop's been doing pretty well recently. Yep. Papa John's lagging. But it doesn't seem like DoorDash ever has any good happiness levels, just because of the fees they charge and stuff like that. But Andy, when you look,
the tacos are soggy when they get there.
Taco, if you're ordering tacos, yes, I'm sure they are soggy. But when you look at this, going into earnings, Andy, it's far off of its all-time highs, above $560 a share that we saw a few years ago. But at the same time, is this one of those slow movers where, hey, if they beat on earnings, maybe it goes up a little. If not, it goes down. But your data seems to think that you guys are pretty bullish as far as earnings score on this one.
Yeah, if the stock wasn't up so much, we would definitely be bullish. I think we're officially pretty neutral in terms of the earnings report. But The one thing, as a trader, I look at, and that is what has burned me this quarter. Well, what has burned me this quarter is, a stock is too high. The stock has already moved up too much. Last quarter, that was true. Stocks would revert towards their mean after earnings, but this quarter, it seems like we're getting a lot of, moves continuing or exaggerating an already strong upside move. And so I'm less scared about the recent price movement in Domino's from a bullish perspective, and I like it long term, so I'm willing to make that bet before or after earnings.
If you look at some of your data overall in this type of space, whether it's fast food, whether it's Chipotle, maybe some of the sit-down restaurants, are you guys seeing any trends overall as far as consumer spending goes that people are still eating out, they're still ordering pizzas, and that's a bonus just because people have jobs and wages have increased? Are you seeing that type of data overall?
Yeah, I think it's kind of twofold, and both of these wins are with Domino's. It is, people are, yes, still eating out, still looking outside of their own kitchen for food, but they are tightening their belt at the same time, not physically, but at least in terms of their wallet, and that is they want to save some money. They're going down market. They're going to McDonald's. They're going to Domino's. They're less likely to go to the high-end steakhouse, where you're paying $70, $75 for a steak. It's becoming a real value proposition and a real value decision, and I think Domino's is in the perfect spot to benefit from both of those trends.
Yeah, higher inflationary pressures, that fits right into their mold. All right, great stuff. Great data as always, Andy. Appreciate it. Have a great weekend.
You too. Thank you.
All right, that's Andy Swan, co-founder at LikeFolio, breaking down the data. Kevin, I was just in Australia. There are Domino's everywhere. I'm like, what are these people?